Well, good afternoon, everyone, and welcome to our follow-up from Monday's show. We have with us Parsley Box, who only listed yesterday, and incidentally, I do hope not too many of you have been caught out by April Fools this morning. I certainly launched one and seem to have caught out a few, which is always fun. Anyway, we would like to have a whole hour today, at least, to get to know Parsley Box. Having just listed, it's great for investors to have the chance to get to know a new company on the market. And with us today, we have Kevin Doran and John Swan from Parsley Box. Kevin will certainly undertake a presentation for you, and then there will be a Q&A to follow. Do launch your questions into the Q&A box as and when you wish, but we won't be doing the questions until the end of the presentation. And I will return to the screen then. Kevin, it's over to you. And I'm sure you've had a busy few days and an exciting few days. So do tell us all about Parsley Box.
Thanks, David, and great to be here today. And John's with me, our CFO. So just, I suppose, quickly introducing you to Parsley Box. The business is actually only just over 4 years old. It was started 4 years ago by Gordon and Adrian Macaulay, and they were specifically looking for products for Gordon's mum, Anne, who was in her mid-70s, living on her own in a typical sort of retirement community, and wasn't really well served by supermarkets and other types of products. So looking around, quite happily, you couldn't find anything, and luckily, if Gordon came and had a coffee with me just over 4 years ago, and we started the business together effectively. So just giving you a quick introduction to John and I. So my name's Kevin, I'm the CEO. I've originally from the technology sector, have spent basically the last 15 years in food, the first 5 actually selling products into retail. Found out that it wasn't the great place to be stuck between a manufacturer and a retailer, and so obviously much better to have a direct relationship with customers, and have started and worked in a couple of direct-to-consumer brands. And I joined as the CEO full-time effectively last year. John, do you want to give a quick introduction to yourself before we carry on?
Sure, thank you, Kevin. Well, good morning. My name is John Swan. I'm the CFO at Parsley Box. I joined the company in February 2019. I'm a qualified CA. I qualified with Deloitte in Edinburgh. I've worked in a range of businesses from small high-tech startups through to PLC and large global corporation. My industry sector background covers various things ranging from contract hire, warehousing and distribution through software, consumer goods and pharma. And I'm experienced at working in fast-moving, changing and growing organisations. And certainly my experience in working in growing organisations has been very useful with my time in Parsley Box as well. We'll go on and have a look at hopefully. So over to you, Kevin.
Thanks, John. So just quickly, I'm trying to give you a snapshot of what makes Parsley Box unique. So I suppose the first thing is we've got exclusive focus on what's the baby boomer plus demographic. We don't like the word elderly or vulnerable. This consumer wants to live independently, and Parsley Box ready meals specifically give them the ability to do that. It's a fast growing market in terms of moving from around 16 million consumers in that segment to around 20 million in the UK alone over the next 10 years. But it's very, heavily underserved. And we obviously have got a fairly unique product, which we'll talk about a little bit later, and I'm sure we'll have some questions on, that allows you to deliver our meals with, and they can be stored in the cupboard, so typically up to 6 months shelf life. We've grown very quickly over the last 4 years, and we've obviously had a bit of a boost in the last 12 months, but we're still continuing to see growth into 2021, and we expect to continue to see that growth continuing. Just quickly talking through the rest of the board, I'm happy to take any questions on this, but I would say generally quite a lot of grey hair here in itself, a lot of experience, as John has talked about, but just, I suppose, highlighting a bit of PLC experience. I mean, Chris Britton was up until recently on the main board of DS Smith, and before that was on Boots Walgreens board. But I suppose more relevant to Parsley Box, he was the chairman at Ella's Kitchen, which was a private company that served the sort of baby market rather than the baby boomer market, and also until recently was the chairman of Grey's, which was sold to Unilever. So actually a lot of experience in challenger brands that are targeting and thinking about new ways to target a specific demographic, and that's exactly what we think Parsley Box is doing. Quickly talking through, what's happening in grocery at a macro level. I'm sure you've tracked some of that yourself, but obviously, online adoption within grocery is still at incredibly low levels in comparison with actually going into a physical shop. So, pre-pandemic, about 9% online, and that includes Tesco.com, etc., delivering to your home from a store-based model. But that's grown massively over the last 12 months. And actually, there was an article in the paper a couple of days ago saying that although it's fallen back, it's still, over 14 and a bit percent. And we'd expect that to continue to grow, and adoption of online and grocery is going to specifically grow. But I think more relevant to us is that our customer base has become much more comfortable about ordering, especially food online. And we've specifically seen our shift of about 25% of our customers ordering online go to around 50% of our customers going online, and that has stuck with our customer base. And the advantage to us as a business is obviously that slightly lower cost of service. We do still take telephone calls. We take about 2,000 calls a day, and as John will talk through, we are trying to make it as convenient for our customers to order however they like. So we do still get checks and postal orders and other types of payment. But I think if you look at that macro market, I think if you then come down into what segment of that market are we targeting, we really are at the sort of dining at home. So our customer eats most of their meal occasions in the home. They do eat out, but they don't eat out as much as a younger demographic. And so we're really targeting the £5.9 billion ready meal market. And we're, our market share of that, if you just take a share of the demographic, would be about 1.4 billion of an addressable market in the UK alone. And as you see from the top right-hand bubble, we've got, a limited set of competition, and we have the ability to target these customers very effectively because they still consume a lot of media, unlike younger consumers that, are typically targeted online, and there's a lot of competition. We're able to target our customers, and I'll talk a little bit later about that. So we're not like a meal kit business, which typically targets a family. We're much more into single or two-person households, and our product set is really unified around that. And we'll talk a little bit more about product in a minute or two.
Now, do you want to put the presentation up?
All right, sorry. Have I not? Sorry, I thought I had that. I had shared the screen, but sorry about that. So if we talk about the demographic, the customer is wealthy. They are the wealthiest part of the UK population. They over 60 have got most of the household wealth. And what you will see is that, a core part of our market is in that 75 plus consumer. But I suppose most importantly, they consume more from us than our younger customers. So 60 to 75, you're probably talking 2 to 3 meals from us per week for our average customer. In that 75 plus, it's closer to 3 to 4. And so those are very valuable customers as that customer ages. And that's the core part of our demographic. But we obviously are expanding and trying to make sure that our product range is as applicable to everybody in the 60 plus demographic as it possibly can be. And you'll see that over the next couple of years of development. The product specifically, David was mentioning that there was, probably some questions around that. So, let me try and explain why it's beneficial to our customers. So we use a technology that's called retort, which I'll talk about on the next slide, but just giving, a highlight to why it's more beneficial to our customers. First thing is, in that smaller household, they tend not to have a lot of storage space. So actually being able to store something in the cupboard is actually quite beneficial. It means that because it's totally tailored to that individual customer, you can have different things to eat in the evening. You can have a variety of a menu. You don't have the same level of wastage, but that allows you to remain independent. But actually, as you get older, it's also beneficial, for somebody who's looking after you, because it's very quick to prepare, typically 2 to 3 minutes in the microwave, and you've got a meal that, is hearty and healthy, and you're happy. But, this customer doesn't want to spend a vast amount of time cooking. They do cook and they do shop, so it's not the only, we're not providing everything to them. But for us, it's also beneficial because it means that we can use a standard courier to deliver. We don't need any specialist vehicles. But when they get the product into their house, they've got enough storage space, which means it allows us to drive up average order value over time. And John will talk about that, because we're not limited by the size of the freezer or the size of the fridge, or the number of occasions that they're making to purchase. And it's always there for our customers. And I think once it's there, you tend to find that creates consumption. If we talk about the process specifically, if anybody on the call has used microwavable rice, which I'm sure you have, it's exactly the same technology that Uncle Ben's use. There's 120 million pouches only sold by Uncle Ben's last year, and in some ways a similar process. So the meal is prepared, it's put into a tray that's a recyclable plastic tray that can go back into curbside recycling once it's rinsed out. It's sealed in that tray, and then it's put into effectively a pressure cooker process, which cooks it. And once it comes out of that process, as long as the pack's not opened, that meal, just like the rice, doesn't need to go through a chilled infrastructure. Now, that technology is not massively used in the UK, mainly because every supermarket in the UK has got large fridges or freezers in the front of their stores, but it is in many other countries, and we definitely think that it's very beneficial to our business model, but it is also very beneficial to our customers. But I think one of the things you need to think about Parsley Box as a brand is that we're not limited to that. We're not a manufacturer, so we're really always thinking about how do we expand the product range and move into other categories. So although this has definitely been the core part of our technology in terms of the meal provision, over the years we will likely move into chilled, frozen, multiple categories to really get as much of those meal occasions within our customers as we possibly can. If you look at it, ranges around 60 products within meals at the moment, but we've got around 130 products within our range, ranging from the meals, the ready meals, into fresh meat and fish that we launched based on customer insight, bakery products, and not a massively clever bit of insight, but very beneficial to our customers. We also can send them wine, and we don't send the bottles of wine. We typically are sending them either half or quarter bottles of wine, and that works really well from their perspective, because again, it reduces wastage. They would like a glass of wine every so often with a meal, but they're unlikely to consume a full bottle because they're in smaller households. So all of those things are trying to drive up the average order value, but also help with retention, and that's important as the business goes forward. And John will talk through some numbers around that shortly. So I'll skip over products because I'm sure that will be one of the areas that there's lots of questions, so I'll leave that to the sort of a bit more of an interactive session. But if you just want to think about what the business is investing in, so we are very capital light. We've only spent around 200k on capex to date. and we really try and outsource to give us as much flexibility as possible. But what we want to do is always have that customer relationship at heart. So we do have a contact center based in Edinburgh. That's the majority of our staff. It's around 100 of the 125 today. But that head office function covers marketing, sales, IT, but the contact center we think is a very important part of our interaction model. As I said, we take a couple of thousand calls a day. It's how our customers like to interact with us, and they actually get a lot out of it, and we also get a lot out of it because it gives us a massive amount of insight. But really what we're trying to do apart from that is outsource. So we outsource our delivery to DHL and DPD. We outsource our fulfillment, and we outsource our manufacturing. But the quality of our manufacturing is very high. Our manufacturers are all BRC, British Retail Consortium, A grade or above manufacturers. We've got a nice balanced supply chain. There's no single manufacturer that has got an excessive amount of the supply, and we control that, and we're constantly working on product innovation to try and improve and enhance our product range with our manufacturing partners, and we'll continue to do that. So that's given us flexibility, and John will talk about some of the flexibility that gives us from a investment perspective. But we plan to, while we're growing, to maintain that delivery model, fulfillment and manufacturing model. Yes, there is potentially more margin within the supply chain, but our view is that the flexibility of not being stuck to a single format is more important while we're trying to deliver the maximum growth that we obviously have achieved today. But then, we also do have some quite good, ESG credentials. So I suppose the first thing is that because we've got that direct relationship with our customers, we're cutting out a lot of people in the chain. So there's no storage, there's no warehousing, there's no supermarket in the middle of the chain, and that means that we're saving a lot of food wastage as well. So typically around 10% of food is wasted within the supermarket supply chain, and actually more importantly around 20% in the home. And obviously we're massively reducing that, and we've got very low levels of returns or wastage within our supply chain, which also means that we're maximizing the profit flow through that as well. But then finally, from the sort of ESG element, the cooking process helps massively. So our customers are as concerned about the environment and their impact on the environment as even younger consumers. And so they are always looking through, what's in the product, how's it manufactured, what ingredients all of our products are typically made in the UK. We're doing everything we can to try and shorten or reduce our carbon footprint as a business, but also within our supply chain as well. And you can see, that we're even just by not using a chilled infrastructure or not using huge amounts of energy cooking at home, we're actually a better environmental citizen by using this product than doing it yourself. So finally, for me, before I hand over to John, the business is very much around customer acquisition and retention, and it's important for us to be able to achieve that in a cost-effective way. We have done today, and we expect we can continue to do that. And what do we use? So if you think about that 60+ consumer, the advantage that we've got against other sort of online businesses is that we've got a very simple way to reach the customers. So our customers typically buy newspapers, they read magazines, they buy products mail order, they speak to their friends because they tend to spend a bit of time with them in their social groups. So we use these 9 marketing channels effectively to acquire customers. And once we acquire customers, we tend to find that the repeat customer, we're very clear about the likely performance of it, and John will talk about that. And we're constantly testing that. So every marketing campaign that we run, whether that's a TV advert or advert in a newspaper, we have a code attached, or we can track back to its performance, and we understand what's working, what's not working, and we can, on a monthly basis, improve that marketing process. And that's meant that we've managed to scale our spend on marketing quite dramatically while maintaining our cost of acquisition. And you can see that the top right-hand graph here, we had a benefit in the first half of 2020 where a lot of customers found us. But actually previous to that, in the second half of 2019 and in the second half of 2020, our cost of acquisition has roughly remained the same. And one of the things is we have spent more on customer acquisition, and we continue to expect to do that. And we've maintained that cost of acquisition while still driving up the number of active customers, the basket size, and the contribution from each order, which is obviously important to sort of long-term profitability in the business. And then I suppose, finally for me, the ROI on not only every £20 that we spend acquiring a customer, what's that likely return on investment? And you can see from this graph that pretty much every customer that we acquire within 9 to 12 months, they have returned their cost of acquisition. And what we're then doing is dealing with their lifetime value over time. And you can see that we've only got 4 years data. So the area out with the shaded box is actual data. What you're looking at in the shaded box is predicted return of those customers over time. And what you tend to see is a relatively high level of understanding and frequency of consumption. We're not a subscription business, but we have got very subscription-like behavior from some of our customers. And we continue to feel that this is a very good time to continue to invest in customer acquisition, and we will continue to do that and become more of a household name, which drives more customers, which drives more refer a friend and referral. And we expect to see that continuing over the next 6, 12, 18 months. We're happy with where we're going. If maybe I just hand over to John and we can talk through some of the financials.
Sure. Thank you, Kevin. Just before we start, I just want to point out all of the financial numbers that we're looking at are based on a calendar year end. When the company was originally set up, it did have a March year end, but we changed that in 2019. So we're now on a calendar year end, which is better for our reporting purposes. So if you just want to jump to the next slide, Kevin. Thank you. So I've only 3 slides in this presentation, as really we have a fairly simple proposition here, and hopefully these 3 slides will capture the key fundamentals of the business. As I mentioned, I've worked in a couple of startups. The hardest challenge I've always found is predicting what the sales numbers are going to be. Parsley Box's initial model was based on a fairly straightforward concept of marketing spend driving the sales. This has proved to be remarkably accurate for us, and sales have tracked well in line and indeed above the target. And now that we've been operating for a period of time, we've built up a comprehensive level of data to support and refine our model and give a high level of predictability and confidence that the numbers going forward will be accurate. As Kevin mentioned, we are a capital light business with minimal capital investment. We have 30 to 60 day terms with our main food suppliers, and all our sales are cash, predominantly credit card transactions, but bearing in mind our demographic, we also take cheques, postal orders, and the occasional £20 note in an envelope. So we deal with all of these things. So the investment with our company is really by acquiring customers by means of an introductory offer and targeted marketing spend to give us what we term a new sale. And we monitor this marketing spend via our customer acquisition cost, which we want obviously to manage and control. But this investment in acquiring these customers drives our customer base and results in then what we term repeat sales. And these repeat sales have a higher average order value, and that's where the profit sits within the organization. So this chart hopefully captures and summarises 3 key areas onto one slide. So firstly, you can see the strong revenue growth with the green bars highlighting the new and repeat business split. And you can see how these initial new customer sales then feed through into the repeat sales. And we'll see this in more detail in the next slide. Secondly, we've referred to this average order value concept, which is the blue line on the chart, which you can see is the new order value, which has got a lower value and it's fairly consistent. But then if you look at the brown repeat average order value line, you can see how that is higher and it's trending nicely up the way from left to right. When you put all these things together, you see the third element on the chart there, which is the EBITDA performance of these 2 areas, new and repeat. And as you can see, the paler yellow bars below the y-axis, which reflect the new EBITDA driven by the marketing spend or investment in the customer base, and you can see that that's negative. And just to be clear, when I'm saying new EBITDA, that's the sale to a new customer, the first sale to a new customer, less the associated cost of that sale being the product, the distribution costs, the credit card costs, and the associated marketing related to that new sale. And that gives us these light yellow bars. However, if you look at the fully loaded repeat EBITDA, the darker brown bars, you can see that that turned positive in 2020, reflecting the strong upward growth driven by our increased customer base. And when I say fully loaded repeat EBITDA, what I mean there is sales to our repeat customers, so the second, third and onward orders from these customers, less the associated cost of sales, distribution costs, the relevant repeat marketing, and then all of the overheads for the business. So that is all of the salaries, all of the rent rates and associated costs. And that just shows the underlying core profitability of the business, I think. And we've got 3 key fundamentals on this slide, which are quite simple. We want to drive customer acquisition to deliver repeat profitable sales. And it's not often you hear a miserable Scottish accountant willing to spend money, but this, for me, is an important part of our business. We do want to drive that customer acquisition to deliver the repeat profitable sales going forward. But we do want to control that cost of acquisition. And this is now helped by the detailed data analytics that we have from our customer database as we build that up. And that enables us to target and focus the marketing spend, hopefully to give us both more effective recruitment of customers, but also more valuable recruits in terms of their repeat spending pattern going forward. And lastly, one of the key things I think, as Kevin has referred to, we want to get more items into that basket, that the customer is buying from us. So the more items we get in there and the more higher value items we get in there, because of the way the cost model is built or based, that just falls straight to our bottom line and gives us an increased profitability. So if you jump to the next slide, Kevin, thank you. As you can probably tell from this slide, our company colour is green, so there's lots of shades of green in here, but hopefully this does highlight our model in terms of the new marketing spend achieving the repeat business. And this slide shows how we can onboard and retain customers, and as you can see, 60% H2 2020 revenue is from previous customer cohorts, and that's just another way of saying repeat sales from customers that we've onboarded in previous periods. And as I've said, the data history and analytics that we now have give us a high level of confidence in being able to predict future revenue. And as Kevin mentioned, we are not a subscription-based company. We've surveyed our customers and they really are very against having a subscription model. They're part of the demographic that has been perhaps targeted more so by scammers, etc. So they're very nervous about that. But as you can see, or as you will see, we do have very subscription-like behaviour, which certainly makes my task in terms of predicting future revenues that much easier. And I particularly like the fourth bullet on this slide that states, with 88% accuracy, we can predict future customer behaviour using the data analytics that we now have. Next slide, Kevin. And just to perhaps finish off, just to highlight a couple of things which we do get asked about in respect of COVID and customer reorder. Our organic growth has been driven by our marketing spend. And as you can see from this slide, it was certainly accelerated in March 2020 when the first lockdown kicked in. More of our customers moved onto the e-commerce platform. We had lots of customers coming to us. Our main competitors actually closed down their ability to deliver to both new and existing customers, and consequently we had a big influx at that point in time, and the cost of acquisition that we monitor and manage, which is roughly £20 per customer, dropped to £5 in that period, reflecting the push that we or the benefit that we received during that period. But most importantly, the chart for me hopefully underlines the consistent reorder trend when you compare 2019 and 2020, and confirms the fact that we have underlying constant consumer behaviour. And in summary, COVID didn't change the shape of our business model, but it certainly accelerated our growth and jumped us several months down track on our original planned and expansion progress. So as I say, we did benefit a lot from that, but we do see a consistent underlying order trend, which I think is very fundamental to the business going forward. Next slide, Karen.
I think that's it.
That's it. Okay, good. I'll hand back to you.
Thanks, John. So, and just reiterating that, our customer consumes most of their meal occasions within the home. They are typically, they're not at work, so they're not returning to work. So we're pretty comfortable that the behaviour, is likely to remain the same, and we're quite happy with that. So the core, I suppose, investment opportunity that you're really looking at, in terms of our expansion is probably twofold. So first of all, it's around, as John mentioned, selling more to existing customers. So making sure that we can deliver, further product development and further expansion into other categories. And you will see that, from us over the next 12 months. But then also thinking about longer term, other high consumption occasions that we could serve, and I suppose just highlighting a couple as examples, nothing that we've currently planned in, is that this customer, a lot of them do live with sort of longer term health issues. So thinking about vitamins and minerals, some level of functionality within the product range, or even to the extremes of pharmacy, is something that we will consider. But really, currently, our core plan is driven on expanding our meal occasions and expanding our average order value, and that will continue to deliver our plan through the next period. So just in summary from me, I do think that Parsley Box does give you a very good access to a demographic that is not that well served by the other incumbents within this market. We're doing that in a very capital light way, and we're benefiting from two areas of a structural shift in this demographic over time. But then on top of that, their ability to purchase online, driving up, gives us a lower cost to service than it would have historically. So we do think Parsley Box is a relatively unique investment opportunity, and we're really looking forward to the long-term journey with fellow shareholders over the coming years. So on that note, I think I'll hand back, David, to you for any questions that you might have.
Great, thank you, Kevin. That was very, very detailed. So I'm sure there are lots of questions. We can start off with a few of them. Right, so Paul asks, rapid growth is being driven by very high marketing spend and trading at a loss currently. When do you expect to achieve profitability?
John, that's definitely one for the
Yes. We have got that mapped out in the next year or so. I think the decision that we have to make as a company now, we've received further funding. We have, before this funding round, we had 5 million sitting in our bank account. So we will be very well positioned in terms of cash to determine what we want to do going forward. And I think the main question that we need to consider over the coming months is just how much and how quickly do we want to grow, and how much are we willing to invest. So our current model lays out that we should turn profitable and cash generative in the next year or so. But I think we're as well looking at the cash we've got in the bank and thinking to ourselves, it's not earning any interest. We can't get much out of it. So we are as well investing that in further marketing spend and accelerating that growth. And I think Kevin alluded in one of his slides to the fact that we get a handsome return on that investment, and we can show the return over the period within about I think 9 to 12 months. We have repaid our capital investment in acquiring that customer, and then we're into profitability. So I think we have to think about seriously investing further in marketing and further accelerate that growth, and that will obviously have an impact on how quickly we are profitable or not. But as I mentioned in my presentation, the underlying core business is profitable. The repeat business is a profitable business.
Very good. And on a similar line, do you expect your marketing spend to decrease dramatically in order to make that profit?
Well, no, I think like Kevin, if you want to say it, but for us, we're predicting future marketing spend and continuing our existing levels and accelerating that level. But Kevin.
Yeah, I mean, I suppose we're making, an investment in the future in terms of that customer base. And I think it's relatively controllable. So we're not buying any long-term commitments, 30 to 60 days on media typically. So, we could choose tomorrow to cut that new marketing spend and obviously be a profitable business, at any time. But our view is that we feel that there's sufficient growth and sufficient market opportunity to allow us to, and should, push us to continue to invest in customer acquisition. But I think total marketing as a percentage of sales will drop. There was a graph in there which I didn't talk about, but that has steadily declined over the last couple of years, because obviously more of our revenue is coming from our repeat customers rather than new customers.
And one from Sarah, who says, who are your main competition and what's your monthly cash burn?
So our main competition traditionally, our main competition, I suppose, is the grocers. Ultimately, that's where the majority of food in the UK is purchased. So they're our number one competitors. But within this niche, there's businesses like Wiltshire Farm Foods and Oakhouse Foods who've traditionally served this demographic. And I think that we have brought a more interesting and new and more vibrant service model to this customer. And I think they generally have resonated well. But I don't think we're taking market share. I think we're growing the addressable market. And as I said, it's a big addressable market.
Okay, and monthly cash burn, is that one you can answer?
Well, I mean, for the past 2 months, we certainly haven't been burning cash. It's been coming in a lot better than it has been going out. So it really depends in terms of the marketing profile, because our marketing spend does go up and down a bit. So, it can be anything from break even to a couple of $100K a month. But as I say, it is very much related to the new marketing spend, and it's the new marketing spend, as I mentioned in the presentation, that's the capital investment as far as we're concerned in the business in terms of driving the customer acquisition in our customer base.
Yeah. And actually, interestingly, I know that someone I play tennis with actually is a driver for Wiltshire Farm Foods, and having mentioned them just now, what are the comparisons there size-wise?
Wiltshire of Harm Foods, look, it's been around for a lot longer than us. is the
Yeah.
first
Oh,
thing.
yeah.
So I think 1987 or something. So I mean, we, you know, they're probably 100 million plus business, but they're part of a large group called Appetito, which is a German family business that is mainly a provider of you know, meals to social care, so hospitals and nurseries and care homes, whereas we've got this, you know, ultimate focus on the consumer themselves. But I think most importantly, we've tried to buck the stereotype of what you would have traditionally think about Meals on Wheels. This is about enjoyment. It's about enjoying later life. And I think one of the things that definitely we've all learned over the last 12 months is that, you know, we don't know what's around the corner. We don't, certainly our customers don't want to go into care. So anything that they can do to remain independent in their own home is a very huge benefit for them. And therefore, you know, they're coming to us and discovering the service. And I think that's a good growth driver for itself, for the business in its own.
Yeah. And I mean, just out of interest, I mean, at Mello, I feel we know our investors well. We know what they like. We know how to serve them. How well do you get to know your customers? Do you phone them? Have you got regular contact with them, or is it all pretty much it just gets delivered and?
No, and that's actually one of the. I mean, I'm just reading an article about, you know, John Lewis closing stores, and I think one of the things that we've taken to heart is service is one of the things that we can massively differentiate ourselves on. And so our relationship with our customers is the heart of the brand, and it's the thing that we're also investing in. We talk about marketing, but, you know, we've got 100 people speaking to our customers every day. We ran a random act of kindness week a couple of weeks ago, and one of our customers who we called, we spoke to for 3 hours, 29 minutes. Now,
Whoa.
you know, that, you know, isn't an investment that makes sense on a call center basis, but it's an investment about service, and we're very keen. And all of those letters there are from my customers that love us and, you know, write to us and phone us, and that's very important to us as a brand.
Very good. Yeah. And Matthew asks, interesting presentation, thank you, but do you provide discounts for large orders or vouchers?
No, not really. I mean, we're obviously trying to incentivize our customers to reorder. So we are always thinking about ways, you know, so we've just ended our PIMS, our gin promotion that we had last month, where we said that, you know, if you just add a couple more meals that, you know, you're going to use anyway, we'll give you a nice little can of gin that you can enjoy in the garden when it's sunny and stuff like that. That's really, we're not a heavily discount focused brand. Our customers are not looking for that. But you know, we're generally not trying to discount, and that's the thing that drives the core repeat orders are much more profitable than the new customers.
The discounts on the initial order, and then thereafter, while we try to incentivize further repeat sales, that's why the average order value line that we saw on the chart is, you know, at £45-ish, and we want to keep driving that up the way by not discounting, and that's one of the key areas that we look at each month and manage, obviously.
Yeah, I mean, John, you mentioned that there's no subscription model, as it were. Yeah. But I mean, the fact that the meals are there available and storage, you know, they last. Mm-hmm. Would it not be good to sort of try and get people to order in real bulk and have a discount for doing that?
Well, I would say there's a couple of things there. You know, people will regularly reorder, and I think they have we have built up some fairly detailed data analysis and information on our customer base and the repeat order patterns and how they order, etc. And you know, there's a fairly regular cycle of reordering, and as I think Kevin alluded to, once we have that initial customer in, then the repeat order pattern and levels are fairly consistent thereafter, and we have a nice healthy payback over the the lifetime value of that customer, etc. And I don't think discounting to get bigger orders would potentially help us very much. It would perhaps just lengthen the reorder period, I think. But Kevin, over to you.
And I was just going to specifically say that is consumption, because ultimately the thing that drives reorder is eating the meal. And so, if we're not 100% of our customers' supply, they are definitely making meals for themselves, eating out historically. So, what we are is just a nice core level. And I think all we would do is be, they would be storing up rather than changing their consumption behavior. And so what we're always trying to do is just push up that average order value in every order.
But won't they be more likely to offer them to a friend when they visit, though, if they've got a store of them? Otherwise, you'll be panicking that you're going to run out.
They do that anyway. I mean, one of our customers who I gave some shares to, Jim, you can read the article online. He's 90. Over the pandemic, he actually went around his little retirement community collated the order and knocked on the door. And so, there is quite a lot of that behavior within our customers. And in some ways, part of the reason, and we discussed it on the call the other night, is that we want a direct relationship with our customers, but ideally we want those customers to also potentially be investors. And if they're investors, they're also likely to refer it to their friends as well. And hopefully it creates this lovely virtuous circle for everybody. Yeah.
And on the delivery bit, presumably though, if you deliver in bulk, you're saving on the delivery cost.
The delivery cost is fairly fixed, no matter what the size of the order is. So, and I would say we are always just talking about averages here. So there is customers who order, more. But we tend to be talking about the customer themselves. We also just have to be aware that we can't. Larger orders make it harder for customers to carry around their house and stuff like that. So we in the same way with our investors, it's a long-term relationship with our customers, and we're here to serve them, and we want to make sure that we serve their consumption occasion that suits them, not to try and just suit the business model.
Yeah. Alan asked, having looked at your pricing, is everything based on a meal for one solution, and will this change in the future?
That's a really good question, actually. I think yes, it is. So I think I mentioned that roughly 50% are single person households, 50%, living with a partner. But, the kids have flown the nest a long time ago. It's maybe sometimes the grandkids coming around. And certainly we are thinking about some of those more special occasions, which is maybe the Saturday night in front of the TV and actually having, a meal for two that's maybe just a bit more celebratory, a bit more restaurant-like. And I think you will see some of that stuff from us. And actually, it will be the thing that you pull out in front of the grandkids and pretend that you've made yourself. So you will see some of that from the brand over the next 6 to 12 months. But the main focus today is the consumption of the consumer themselves.
Yeah.
And we have recently brought in chilled food boxes. So we're offering a couple of meat boxes and a fish box as well to further, broaden our range and offerings to our customers. And as Kevin says, we want to continue to focus that. And, we do take very detailed customer feedback. We do speak to our customers a lot. We take their feedback on board, and that helps deliver, what these customers want, and hopefully helps our sales going forward.
Yeah. And Charles asked, what about sustainability? I'm a subscriber to HelloFresh,
yep.
But the waste in terms of packaging is not good. Is there any recycling of packaging?
Yeah, and that is definitely, in fact, we're about to publish a sort of our part of our roadmap for that. And that's something that, as I said in the presentation, our customers take very, seriously, and so do we. So I suppose the major thing is around, so our cardboard sleeves are widely recyclable in household waste. Our trays, as I mentioned, it can just be rinsed out. I mean, I know there's been a big move in the food industry to paper trays. You need to remove all the food from that before you put it in recycling. Have you ever tried to remove, bits of potato from that? We can, we will do everything we can to increase those credentials going forward. We think it's the right thing to do as a business, and as I say, our customers are demanding it, and that's what we need to remain customer centric around that.
Yeah. Now Dave Williams here says he's not got a microwave. Is there any chance you could provide the meals in an oven friendly way, maybe oven friendly containers, rather than having to transfer the meals to oven dishes?
That's and in fact, it's directly linked to that sustainability question. So unfortunately, my oven-proof trays currently are only available in black plastic. And black plastic, if you don't know, is not widely recyclable. And basically, it has to go into landfill. So we've made a choice as a business that we're not going to do that, because we don't really want to change the impact on the environment. And so until that tray technology catches up, which I think it will over the next 6 to 12 months, it is microwave focused. But as you said, you can decant the product into an oven proof dish and heat it up that way.
Yeah. And another attendee asks, I've noticed that some of your customers mention that the portion sizes of the meals you sell are quite small and need to be bulked out with rice, potatoes, etc. Are you looking to increase the portion size in line with their feedback?
Yeah, we do. I mean, I would say that generally the older customers do consume less. So I think what you're seeing typically here is sort of online focus of some of our younger customers. And I should say, when I talk about younger, I am always talking about sort of 60 plus rather than 75 plus. But yes, we are. I mean, we did historically launch a range of larger meals based on that feedback, and actually nobody bought them. so it was quite interesting that piece of feedback when we did it didn't translate into sales. But definitely we will have a wider range of slightly larger meals over the next 6 to 12 months as well.
Yeah, I think variety and different sizes is often the thing, because there's never one consumer that fits all, as it were. So,
and the great thing is, because of our supply chain and our, we've got this core customer. I suppose what we will do is move definitely into some of those other areas, bigger meals, potentially, as I say, maybe things like fortification, higher levels of vegetarian meals, higher levels of mini meals, softer eating. All of those things you will see from us over the next 6 to 12 months.
So just
I think the other thing is,
go on.
Sorry, I was just going to add that we do have sides that can go with the meals as well, and we do have the starters and the puddings as well, and the puddings are very good sellers for us too. So you can have a 3-course meal if you wish, if you want to eat more.
Yeah. And I mean, just out of interest, what is your absolute most popular meal?
Cottage pie.
Cottage pie. Yeah.
And in the UK, chicken tikka masala is the most popular ready meal. It's not. I mean, obviously our customers generally are not quite as interested in sort of spice and heat, but again, it's up there. So it's cottage pie, lasagna, sweet and sour, those types of products.
And which one gives you the most complaints?
That's a great question, actually. We don't. I mean, we have a team that's dedicated to sort of looking at customer complaints. I would say it's very varied. And the ones that have, I mean, probably the fish pie is the number one product that if you cook fish for 30 or 40 minutes, it's never great. And definitely that's a product that we have been asked for a lot. And we've developed, but that's definitely going back through the development process to improve, because it doesn't quite meet as high expectations as we thought it would.
Oh, and then that was one of the reasons we brought out the fresh fish box as well, to meet that specific feedback from the customers.
Yeah. It's interesting, actually, on the chats here as opposed to in the Q&A. And just a reminder, if you want to ask a question, put them in the Q&A box. But in the chats here, I got an instant reply on that one. So one of your regular users says the sausage meal is the least attractive.
Yeah, well, I'll take that on board, David. Absolutely. I think that's. I mean, look, we run net promoter scores. So we run basically a survey online and by telephone of the quality of the call. How did you enjoy the interaction with you? How was the delivery? How was the meal? And we're constantly pulling all that data to try and analyze things to improve. So, we're a relatively young business, but we're not going to sit around and say that we've got everything right.
Yeah. And another consumer here saying that I found the size of the product is ideal for lunches, particularly during the winter. Hot meal in 2 or 3 minutes is great. Do you envisage an increase in the vegetarian range?
Yeah, it's probably our number one asked, request. So yes, we definitely will. And we have got some of those in development. So, you will see a constant evolution of the menu and an improvement over time. And, that has been like that. I think we launched with 15 meals as a comparison. And we've got, as I say, about 60 today. But within that, there's constant evolution and improvement.
Yeah. Now, a couple of questions on the IPO itself. Sarah is asking, how do you feel it went? And are you happy with the results? And Humphrey says, as a new Parsley Box shareholder applying via primary bid, I am disappointed by the pricing of it. It was announced, obviously, after the placing took place. And do you feel shareholders, I guess, have a point about the price being announced after, or should they have been able to know what the price was in advance and then work out whether they want to go in or not?
I think a lot of that I think we touched on it. A lot of that's out with our control. So
yeah.
I don't think there's much that we can do about that. I think the business is well capitalized. We're focusing in the long-term growth of the business. That's what we've always done, and that's what we'll continue to do. So, short-term movements in share price is not something that we're going to get worked up about.
Do you feel there's different pressures on you now than when you were not listed?
No, I actually think the opposite, to be honest. I think that in some ways, we're a direct-to-consumer business. We take customer feedback to heart. We will do exactly the same with investor feedback. We're not people that are going to shy away from that. I'm the single biggest shareholder myself, so I'm very motivated about making sure the business is successful. And I think as long as we all take a good think about how do we achieve that together, we will be successful.
Yeah. And maybe just tell us how you got Parsley Box. People are not going to open it and find a whole bunch of parsley in there.
So I suppose the general thing in food is although John doesn't like it in his graph, green is a positive color in terms of, and we did a huge amount of research early days about, well, one, what's available. The internet's now, it's quite hard to even just get a domain name. So that was important. And then we did a bit of research about, how do you feel about parsley? And partly it came back from, I don't know if any of you remember the herbs, which was on TV, and Parsley the Lion. So there's where the name came from. So bit of nostalgia for you. So.
Yeah. And Sarah's asking as well, what percentage of shares are now owned by the directors and staff?
Quite a lot, actually. I know that the founding shareholders own just over 30%. So I think own about 11, 12%. Again, from a policy perspective, early on, we wanted to make sure that all of our staff were shareholders, and so right the way down to the guys that answer the phone, they're all shareholders. And we're doing everything we can to make sure that they're incentivized, because obviously that comes through in terms of they feel ownership as well, and that's good for them, and it's good for the customer too.
And just out of interest, because I think one of the key things you've mentioned is how the children of the people having the meals are probably the ones who get involved in encouraging them, or maybe even ordering them in the first place. Do you feel you're engaging direct with the consumer, or is it more they're being ordered by third parties?
No, it's not. So, and actually, I think I've got, my kids are in their 20s, and I don't like them telling me what to do, and I don't think our customers in their 80s or 90s, or John's mum, likes be told by their kids what to do. So what we've done is we've created a service that totally empowers them to do it all themselves, and they've discovered it. And yes, we do get some kids buying for their parents, but the majority of our customers feel totally empowered to lift up the phone, have a nice conversation with us, order online if they want to, and have a good experience and have a chat with us. And that's been great.
You've just shocked me, Kevin, if you've got kids in their 20s.
I know. Well, there you go.
You don't look like you should have. But anyway.
Well, that's one thing. I am in my 50s, so I'm a bit older than I look.
Really? Well,
yeah.
Well, I don't know about whether you eat the Parsley Box contents, but
it's healthy living. Yes.
Yeah, whatever it is, it's doing well for you. So if you're having direct contact with pretty much all your consumers, do you get to know things like their birth dates? Could you be sending them a nice present on their birthday, or?
Well, actually, it's a good point, and it's something that we do. We don't, but we actually did, and it goes back to one of the founding things that just found that we had major engagement with our customers. So 2018, a year in, we decided in run up to Christmas, let's send our customers a Christmas card. And we sent, at that time, 10,000 Christmas cards to our customers. And what we were amazed by is we got Christmas cards back. And we've kept that tradition going. And, last year, I think we sent just over 300,000 Christmas cards to our customers. And we still get Christmas cards back. And, it's again coming back to the fact of having huge respect for our customers and engaging them. But we don't ever want to over market to them or feel that we're doing anything that's inappropriate. So we tend to always think about that customer in the heart of our proposition and do things that will surprise them, but not sort of be short term about that relationship. So.
Very good. I'm getting one of your consumers again. What about some improved mugs?
Well, actually, we have. So if you get their details, David, we have an improved mug. And if there's any further feedback on the mugs, I'm happy to send them an improved mug. So
yeah. It's often funny, the comments you get, as I mentioned earlier, I think about AGMs, you never know what you let yourself in for. And when you send out the Christmas cards, you've got to be happy that you're getting Christmas cards back. You don't want the ready meals coming back.
Yes.
Great. Oh, we got another question here. My mum likes the product, but complains it looks nothing like the photos.
Well, that's an interesting question. So, well, it is the product that's photographed. They are done in a studio, so they're probably never going to, look exactly the same. But I'll take that on board. That's a good bit of feedback, and we'll feed that back. So,
and just out of interest, how often do you try the product yourselves?
We eat it in the so it's one of the many benefits you get of working at Parsley Box is that you get and actually it's amazing that obviously the customer service team are a bit younger, but actually they love it as well, because it's just as one of your attendees said, it's very handy, 2 or 3 minutes. And you've got something that tasty, delicious, off you go. So we eat it in the contact center every day, pretty much.
So
and I must admit, as we've gone through this IPO process, and I've been really busy, the convenience and speed of being able to get a quick something to eat at lunchtime or in the evening has been fantastic. So yes, I would approve of that. Yeah, definitely.
Yeah. So yeah, they never go hungry at Parsley Box then.
No.
No. And the average waist size?
Not too bad. We do have some, John always has some restrictions, so that you're not allowed to fill your bag on the way home. So,
well, Justin is asking, do you have gluten-free options?
we do, yeah, and actually an increasing range of them. Gluten-free is something that within a factory is it's a higher care product in terms of manufacturing. So we've got slightly limited range, but actually one of the things that we have done and continue to do is think about, simplifying the ingredient declaration. So is there an ingredient that's maybe got wheat in it that doesn't need to have wheat in it? And we definitely are looking at driving some of those ingredients, especially the allergens, out of our ingredient declaration, at the appropriate time.
Great. And I mean, a quick final one from me. We don't have any more questions now, and we're just over the hour, so everybody seems happy. I mentioned about the fact that, sons and daughters and people have obviously initially maybe even got their parents involved in this. Is there a way they could have access to the ordering process so that they could send flowers or send, lovely box of chocolates that you'll have in your capacity?
Yeah, and so we've just, one of the reasons also of going public is we want to attract, more talent onto the management team than just John and I. And I think that where we have is that we have managed to do that. And one of the things that they are talking about, that they're joining recently is thinking about more seasonal menus, but also seasonal gifting. So we're obviously coming up to Easter, but also coming up to Christmas. So being able to we launched gift cards at the end of last year that you can send a gift card to your parent because what do you buy them? But we definitely will see more gifting opportunities, things like, as you say, flowers or potentially things like chocolates and presents, maybe some more hampers around those occasions. You'll definitely see from us over the next 12 months.
We had a new drinks company that came to Mellow about a year ago, and it was a very low sugar drink, and probably something that older people may have been interested to get to know. Maybe you can do even trials of things that go through your system and effectively get feedback for companies.
Well, we did that. I mentioned it a little bit in the presentation, but we did that with Grays in the middle of the pandemic. Is that we actually sent 50,000 Grays packs to our customers just as a thank you, as a gift in their orders. And actually, what they did was they used that to try and understand is the product and packaging, although it's targeted at a younger customer, is this something that our demographic would consider? And it was really good feedback for them.
Great. Okay, well, that wraps it up, Kevin and John. Thank you very much for giving us a really good detailed presentation. Everybody knows Parsley Box that's on the webinar, that's for sure. And good luck with everything over the coming years. And we'll watch closely, and hopefully you can come back again, maybe even to a physical event that we have.
Yeah,
we'll be testing out the samples then if you come physically to see us. But anyway,
we'll definitely do that. That sounds great.
Yes, definitely. That sounds
brilliant.
good.
Thank you both of you.
That's great.
Thank you.
Thanks.
Thank you. Bye.